So please go to page 5. You'll see on page 5 here it says capitalized interests. I just need you to understand something. I just need you to understand when they talk, can you see here, it's the word capital. Ne? And capital is actually the main investment. Right? So when we talk about the capital amount, we talk about the principal investment. Now we're talking loan, and you say, but it's loans. But remember, for the bank, it's an investment if he lends money to you, right? Because you're going to pay him interest. So when we talk about the capital amount, we talk about the initial amount. Oh, and I can't spell. Initial amount. In other words, when we do loan, we talk about the principal loan. Okay, that's the capital amount. Okay? Okay, in other words, what am I saying to you? Grade 8 and 9, we use the word capital for the owner's investment in the business. But there's more than one use for the word capital. Okay, so now, when I capitalize loan, we always capitalize the interest. We're not going to do anything else. And I'll show you both, but you'll see it's always capitalized. If it's not capitalized, right, then it means it's just a normal thing. Here's my loan. I made a loan of 150, right? I have an accrued expense, meaning I must still pay, right? I must still pay, because that's what accrued expense mean. It's a payable expense, right? Of 15,000, and I put it in the accrued expense account, which is a liability, which would go to the face payables, ne? Everybody with me? And then I will close it to the profit and loss, which would go to the income statement. You guys with me? So if I go to the income statement here with interest expense, in this case it will be 15,000. You see? Now I can tell you there's a 0.01% chance that they're going to ask it like this. They usually ask it capitalized. Okay, so when it's capitalized, it means the interest is added to the loan. Now can you see it's still 15,000, but can you see we short account accrued expense? There's no accrued expense. Can you see it? Because why? I'm going to take that interest to the loan itself. So now I'm making the loan amount more. You see? You guys get what I'm saying? And that whole action is called capitalizing. It means I'm adding the interest to the original amount I borrowed. Okay. And still, if I go to the income statement, my interest expense is still going to be 15,000. So can you see what happens in the income statement is not determined by capitalization. Okay. What does happen is if we go to the face of the balance sheet. If we go to the face of the balance sheet, ne? If it's not capitalized, please don't talk now. If it is not capitalized, it will form part of trade and other creditors. I'm going to write here interest on loan accrued expense. We'll go there. But if it's capitalized, it will form part of the closing balance at the loan itself. So can you see it's just where I put it in the balance sheet that matters. You guys shocked? Can you breathe? We will do this again and again and again. So we will practice it. Okay, now the same goes with a fixed deposit. So if I talk about the capital amount of the fixed deposit, it's the original fixed deposit. Okay? So if it's not capitalized, can you see I'm going to have an accrued income? Okay? So that 10,000 will go to interest income on the face of the income statement. Happiness. But if it's capitalized, can you see I don't have accrued income? I take it straight to the fixed deposit. Now I'm capitalizing it. I am adding it to the fixed deposit. Okay. So the word capitalized with fixed deposits, what we will say is it is reinvested. Because what does it mean for me? It means for me that now my investment is 110,000. So can you see my amount that I'm calculating interest on is increasing? Because no longer is my fixed deposit 100,000, it's now 110,000. So can you see my interest is not going to be 10,000, it's now going to be 10,100. You see? So I'm going to start earning interest on the interest. And let me tell you, banks automatically reinvest your fixed deposit interest unless you make an arrangement with them for something else. Now, what does that mean for you? If I go to the face of the balance sheet, the same thing. Face of the balance sheet, if interest on fixed deposit is accrued income, it will go with receivables. But if it's capitalized, it will go with my fixed deposit. Ne? You guys get what I'm saying? It's just a classification thing. So make a thing for yourself. Make a thing for yourself. What I want is this. If it's loan, interest on loan. Okay. That interest on loan goes to the income statement. Doesn't matter if it's capitalized or not. If it's not capitalized, ne? The part that I'm still owing would be an accrued expense. And that accrued expense is a current liability, payables. But I can tell you, chances that you get it like that is very, very small. If it is capitalized, ne? Then you're going to add it to the loan. Can you see the income statement doesn't matter? You show the total interest for the year. But when I go to capitalized, not capitalized, it's just where I show it in the face. Okay. If I do interest on fixed deposit, interest on fixed deposit goes to the income statement. Ne? Doesn't matter if it's capitalized or not. If it is not capitalized, it's an accrued income, which is a current asset, which is a receivable. If it is capitalized, or if they don't use the word capitalized, they say it's reinvested, then you're going to add it to the fixed deposit. And that's the simple thing about it. Okay. So now I want to do some exercises with you so that we can practice this. I will put this on the group. Are you guys? So, here we go. So now when I go to my exercise, let's do the exercises. I want to make sure that you understand how to do this, because this is an easy 4 marks. especially in the income statement. Okay, now they say use the loan statement. Now the first thing you need to realize is the loan statement is the final info you get. So with the loan statement, which is the final info, it means everything has been taken into account. Can you see they give you an opening balance? How do I know it's the opening? Because it's the 1st of July 21 and they send it to you 30 June 22. You see? Then there's a closing balance. Right. Now can you see what they did here is they gave you the opening, the closing and the payments. Now I need you to understand this. If I look here at my T account, okay, so if I want you to look here at the loan T account, so this loan T account is set up from this statement, okay? So now can you see here's the opening balance, can you see that? Here's the total payments, right? And here's the closing balance, you see? Now when we do the calculations, we're not going to use the balance BD, we're going to use everything on top. Because I know all of these two sides need to balance. Meaning if I short an amount, which in this case is the interest on loan, that amount that I short is the balancing amount. Does that make sense to you? You see? How did I do that? How did I do that? And I'm going to quickly do it to you as a calculation. And I want you to see this. I have my loan. And we sang the song last year. You know the song. Opening and a closing and a bank and the interest on loan. There. So the opening was 60. The closing is 55. The bank is 20. I know that two sides need to balance. Can you see? I'm literally using only everything on top. I'm not using the BD. The closing, I'm using the CO. The opening, I use the BD. Does that make sense to you? So now, I see interest is missing. So how will I get interest? 20 plus 55 less 60 gives me 15. And we did it last year. It's not new. So, but now I just want to remind you that 20,000 there, that 20,000 is the payment on loan and interest. Let me prove it to you. What is the difference between the, let me just get, okay, all my pens is gone. Let's ask ourselves, what's the difference there, between the opening and the closing? So if I look, what's the opening less the closing? 5,000. What's the interest? 15. How much did we pay? You see? So basically, what am I saying to you? This 20,000, if I subtract what I paid on the loan, I will get the interest. You guys get it? Not. So I go again. I say to you, what am I paying every year on my loan? I'm paying interest because I have the loan, and I'm paying back on the loan. Right? You understand that? Now, if I look at this, the difference between the opening and the closing balance, that's 60 less the 55, tells me what I paid back on the loan. You see? So if I paid back on the loan 5,000, it means I paid 20,000, 5,000 is for the loan, the rest is for the interest. Does that make sense? Okay. So now I just quickly want to show you, can you see, because it's capitalized, can you see that I basically debit interest on loan, credit loan? Can you see? And what goes to my income statement? 15,000. If this was not capitalized, then this would have been accrued expense. If there was a balance, it means I did pay some of it. Let's say I had a balance for interest on loan for 10,000. My profit and loss is 15, then it means I have an accrued of 5. But that is only if it's not capitalized. If it was capitalized, they can also say 10 and 15 and I have a 5 here, but then the 5 would have to go to the loan. Meaning the other 10 is already included in my balances. Okay. You guys got me? Now when I go, right in the info, can you see my interest expense is that 15? Right? And can you see when I go to the face of the balance sheet, I'm going to take the closing balance less the short-term loan. So what is my closing balance? It's the 55. So I say 55 less. Now what's the short-term loan? Now you can see here they didn't give me any information about what I am going to pay back next year, because that's your short-term loan, the part that I'm paying back next year, right? So then I assume I'm going to pay back the same as this year. You guys get me? And what did I pay back this year? 5,000, not 20, because the 20 is the loan and the interest. The short-term loan is only the loan. And in other words, how much did I pay back on the loan? 5,000. So I say 5,000, which means my short-term loan is 5, my loan is 50. Can you see it adds up to 55, which is the loan at this stage? I owe 55. But 5 of that I need to worry about, because next year I am going to pay that off. So I need to make sure I have cash. Everybody sharp with this? So now I'm going to start with activities.